Alrighty, guys, welcome to our Sunday webinar. I appreciate you guys all being here today as we look at the charts and kind of look at what's going to be happening in the markets this week. For those of you guys that are tuning in for your first time, my name is David Schinkel. I am the CEO and founder of Positive Traders. We run these free webinars every single Sunday religiously at 7 p.m. Eastern. We go over the charts for the coming week and kind of just give you guys a preview and insight of how I mark up my charts, what I am looking for confirmations or for just taking trades. If you guys like what you see over the next 30 minutes to an hour, and you guys want to learn more about what we do, we have a website. You guys can go to positivetraders.us and learn more about us. We do have a paid group where we give out about 10 signals every single week. That's what we're getting back to averaging this year, as well as a free trade copier. And I hold kind of a session very similar to this Monday through Thursday. It's a little bit more in depth. We talk more about, the trades that we're looking to take specifically, and if we're in an open trade, how to manage that position. Last week in the premium group, we closed out with net profit was 184 pips. But yeah, so we're looking to, I want to break another two. I want to break 200. At one point last week, we were at 250 pips of profit. Took a couple losing trades at the end of the week, but nonetheless, still a very profitable week. So I'm looking forward to this week being another very profitable week. If you guys are in the free group, I'm definitely want to throw a signal or two your guys' way this week. So definitely stay tuned. But first off, let's look at the economic calendar for this week. We do have a couple things going on in the markets this week. If you guys live in the U.S., tomorrow is Martin Luther King Day. So all U.S., that's national holiday in the U.S. So that we are going to have all of U.S. banks closed. And if you guys know about the markets, if you guys understand the volume of the markets, the U.S. dollar makes up about 60% of all the volume in the market. Actually a little bit more than 60%. So that being said, when banks are closed, trading isn't going on. Trading is going on, but not between the U.S., not between banks in the U.S. So liquidity will be pretty low tomorrow. So definitely make sure you guys have that on your calendar. Throughout the week, we do have quite a few news just economic events happening a lot on Wednesday. If you guys are new to looking at these economic calendars, you're looking at the red. What you're looking for is the red folders for the high impact expected events. And then if you want to learn more about them, eventually you'll start to kind of know, you'll start to see them, almost every single month, because a lot of these do happen on a month over month basis. We do have Janet Yellen, head of the Federal Reserve, she might not be the head of the Federal Reserve for much longer, but as of right now, until President-elect Donald Trump is actually inaugurated, she is going to remain the head chairman. So she is going to speak on Wednesday afternoon. That's going to be a pretty big, anytime she talks, it's generally a pretty decent market moving event. So we want to be on our toes about that. Tons of news on Thursday, also tons of reports on Thursday. And then finally Friday, guys, Friday will also be a volatile day because Friday is the inauguration of President-elect Trump. So I'm sure markets are going to be crazy. This is going to be my first time trading an inauguration, so I don't even know what to expect. So, when you don't know what to expect and it's a shot in the dark, we're just going to stay out of the market. So, I'd like to be net over 200 pips by Friday. So, that being said, guys, let's jump straight into the technical analysis. Last week, we didn't touch gold at all. It actually remained intact with its bullish rally all week long last week. And it looks like it's looking to continue that rally. I would be bullish on gold if we do break this top right here, guys. Let me get my little marker out so you guys can see what we're talking about. All right, so we have this top that's been created on gold. If we break this top, more than likely this is going to be a trend continuation this week, especially towards the end of the week with the uncertainty of President-elect. Nobody really knows exactly what's going to happen. So that being said, when investors don't know what to look at, they invest in gold. So this gives us pretty good reason to believe that gold is pretty much going to be bullish this week, but we are going to stand on the sidelines But do look for, some consolidation or a pullback down into this area, and then look to continue this overall trend up. Now, if we do break this bottom, kind of this consolidation area that we saw last week a couple different times, right here and right here, if we can break down through this, then we'll probably going to end up retracing back down a little bit, probably towards like the 1160, 1170 area, this previous zone right here. All right, so we're staying on the sidelines with gold. Now the dollar, you guys can see the dollar is slowly starting to inch its way lower. And if we see a continuation of the sell-off on the dollar, this is going to be looking very good for gold moving up, as well as Euro USD moving up, which we'll look at right now. So I'm expecting this to continue to fall this week. However, you guys know how it goes, right? You guys know the drill when it comes to trading, right? I don't trade on Sundays because the markets can make some moves that don't really make sense. We could just see this completely reverse and price continue moving higher because we haven't broken through this previous support yet. But if we break through the support, guys, expect some consolidation and then a pretty nice drop further down. And that's going to be the catalyst for gold to continue moving up as well. And same with Euro USD moving up if the dollar wants to continue to weaken as well. So last week we caught a couple nice, or actually one nice short on Euro USD that hit our take profit. Other than that, this pair has been pretty primarily bullish all last week. We were looking for more opportunities to sell. I know a lot of people out there, a lot of traders were looking to sell euro dollar and may even continue to look to sell the euro dollar, but we have to see what happens in this zone. It was last week. Is this rally going to continue, or was it just a fake out for us to finish a wave and continue moving down? All right, now if we end up reversing, all right, if we can break through this 23.6% retracement level, all right, then we're probably going to head down towards the 50%, which is this double bottom up in this area. All right, and then even lower, and then possibly make new lows. But so guys, my style of trading in the beginning of the week, it's always like an either or situation. You never really know which way the market is going to go 100%. Nobody ever does, right? So you have to trade what you see, not what you want to happen. So some of you guys might be looking at this, oh, you guys want euro dollar to come down. Others might be saying, oh, you want this to come down. We don't know. We have to let the price move, and we have to listen to price action. And so it's either one of two scenarios, right? Either this top is going to get broken, and then we're going to look to continue buying into this long-term trend, or we're just going to see some exhaustion and beginning of a retracement from this move down here to this move up here. And we'll start to see this move begin to be retraced to some point. And then once you have your support levels broken, then you just continue selling. So the name of the game with long-term sustainability in Forex, guys, is not only being able to adapt, but just understanding your risk management, and then also on your trades, just trading what you see, not what you want to happen. You can't be too hard-headed on one direction because anything can happen. So moving along to USD chafe, all right, the US dollar versus the Swiss franc. This pair looks very similar to the index, as you guys can see. All right, it moves pretty much with a positive correlation to the index. So as the dollar weakens, we usually see USD chafe continue going lower. So this is at a pretty significant level right now. You guys can see it's this zone, all right, where it provided support previously. It's getting broken, and on the 4-hour chart, we have this bear flag that's being formed. All right, so if this support gets broken, then we're definitely going to see a decline in this pair. But again, it's Sunday. We have to see, does price want to move up and continue and go back up to test this area and then possibly break it and move up higher? Or does it want to break this low, make some sort of consolidation or a retest, and then continue going lower? It's always an either or situation, guys. But in my opinion, from my experience of trading, Sundays don't offer good risk to reward. They're very confusing. I always call them like trap days, right? Because brokers know, right? Brokers know, banks know, people know that, us as human beings, we're influenced very emotionally. So, I remember back when I started trading, and every time the Sunday, the markets would open on Sundays, I'd like race to the charts and try to open up a trade right away and try to start making money right away. And brokers know that people do that, guys. So they make it, or not brokers make it, but just there's not, the smart traders, the smart, institutional traders, hedge funds, the smart money that's in the markets, they don't trade. They don't do as much trading on Sundays. So that creates a lack of liquidity in the market, which increases the volatility in the market. So, stop losses are hit very quickly. Spreads are higher on Sundays. There's a lot of reasons just why it's not good to trade on Sundays. I do primarily most of my trading Tuesday through Thursdays, with the exception of sometimes Fridays actually aren't the worst days to trade, but definitely like a couple hours before the market closes, you want to be out of your positions. But Sundays, in my opinion, are by far the worst days to trade. So look for support to be broken on this pair. Okay, that's right. I'm going to be biased to the downside on this pair, but again, that's just my bias. Don't take a trade off of bias. Take a trade off of confirmation. All right, pound dollar. You guys can see, so pound dollar, this, I wish we would have gotten this drop last week. So one of the trades that I gave out in Telegram, and this is also a trade that we took in the premium group based on previous structure last week. Okay, so you guys can actually see I put these on here. I'm going to delete these right now, but I put these on here so for the analysis for the premium group, you guys can see why we're taking trades. But if you guys can see through all this clutter in here, I'm not going to delete it because these are all important things that I have on the chart. But this red candle right here is what this is referring to. Last week, we got a confirmed break of near-term support. Okay, that near-term support structure was this structure right here. We broke it, so we were looking for shorts. We actually caught two great shorts on pound dollar last week in our group, and both of them hit take profit perfectly because of just some simple analysis, just like that. When you see support broken, the sellers are going to step in and continue pushing price down. And then also so that was our first trade. And then last week we had, a little bit later in the week, we had this bear flag that we saw. And so we were looking to take a sell, and you guys can see with this drop, even though price is still moving sideways and consolidating, we still got a trade that hit take profit because we had this. It was such simple analysis, guys. We have this bear flag. All right. So we waited for this support to be broken, and then we sold, and we profited very nicely off that. So when you guys are patient and things make sense and you have some cognitive analysis behind your trades, everything works out. But too many people get, caught up in wanting to take a trade just to take a trade and, get that euphoric feeling of, oh, I'm in a trade, that exciting feeling, do something else if you're going to trade like that, because you're honestly going to end up just losing a lot of money in the long run. You really have to discipline yourself, and that's that. So there's no other, shortcut to winning and being sustainable long-term besides, controlling your emotions. So this actually outlines last week's trade call that I gave out. You guys can see I actually gave out the trade right here. We had this bear flag forming, and we were looking for this support to be broken, which it didn't get broken until here. Our trade activated and didn't quite hit our take profit, but that's okay. That's okay, right? We're going to take losses. And then of course, you guys can see price is much lower right now. It actually closed at opened at new yearly lows. So this is actually where the pound dollar is at right now, guys, if you didn't see that. So we have this huge gap. Okay, let me be the first to tell you guys that if any trader, any guru out there tries to tell you that gaps always close, gaps do not always close. Okay, so just because you guys see this gap, you guys are probably like, oh, that's a great buy. Yes, it could. Don't get me wrong. You could risk it. This could close. Who knows? Whatever. But I can find multiple examples on the charts, guys. There's gaps out there that haven't closed for years and years and years. Some gaps that have never even closed in decades. So that being said, you want to be, don't be that person that thinks the markets are that easy to make money in, because, if you do your analysis properly, yes, money is not hard to make in Forex because it's a patience game. But if you guys just try to take advantage of the system and just try to buy or sell every single gap to make a quick buck, I promise you in the long run, it's going to end up, you're going to end up regretting it. So I'm going to delete that now that everybody has seen that. So I'm going to be further to the downs. And guys, this drop is because of Brexit. Okay. So Brexit, basically people are starting to wake up to Brexit. People are starting to take more, investors specifically are taking more, what's the word I'm looking for? They're taking more exposure, I guess, to Brexit. It's becoming closer to Article 15 being released. So the closer we get to that, the more the pound is going to weaken long term. So trading this pair is pretty simple. I've been pretty bearish on it since we broke this support originally right here. So now, markets moved sideways a little bit, but this week we could see some further moves to the downside. So I'm looking for this to push up a little bit higher, just kind of see what happens on Sunday, and then definitely look for a continuation of the pound weakening. We look at pound yen, same exact thing, right? And this is both these pairs, guys, when you're looking at this, these are all due in part to pound weakness. There's nothing else that's moving these pairs other than pound weakness right now. If we actually fib this, I'm going to delete this fib real quick, and we'll put this one on here. Okay, so if we go low back in October to this high, just swing low to previous swing low to swing high. We're right around the 50% level right now, right around the 50% level. So we're going to look at opportunities for this pair just to continue moving lower. All right, just continue moving lower. Wait for some consolidation and move lower. This gap may not close, right? This gap may just come and touch the bottom or something. So if price comes up to this bottom, then I'm looking to sell further, but definitely a continuation of the larger reversal that's being staged on this pair and pound dollar. All right, AUD USD. AUD USD has a possible great setup coming this week, guys. I'm very interested. So if you guys are kind of writing down notes on these pairs that I'm talking about, definitely put like a big star next to AUD USD. I think this will give us a great trade this week. If we can see, as you guys can see, this green box right here. If this green box is broken, okay, if we push up through the support, resistance, wait for a bounce to your resistance, now support, and look for a move higher up to this fib extension level. All right, from this previous swing high to swing low. So this trade is definitely giving us some good risk to reward right now, especially if gold continues to go higher too. That's going to look very good for this pair. You guys know gold, AUD, USD, NZD, USD, they're all positively influenced with each other. So if gold continues to skyrocket and move higher, then that's going to be definitely a great catalyst, a great kind of a side confirmation for AUD, USD to continue moving higher. And then not only that, but our technical analysis of this top being broken and just a continuation of this trend reversal that is being staged. So definitely a very hot pair this week, guys. I'm going to have my eyes on that very carefully. And NZD USD as well. I don't have this chart marked up quite as much as AUD USD, but looks very similar, right, guys? You guys can see this bull flag that's forming right here, and we're looking for a push higher. Just kind of looking back on the chart, so you guys can see it's very, very similar situation like right here. You guys see that? And then this bear flag, and then with patience, we see price continue to move higher. That's something sort of I would expect, but a bigger rally. If you guys understand trading flags and pennants, or you guys, whatever, everybody has a different name for either. If I call them flags, some people call them pennants. I think Baby Pips calls it pennants. But either way, where you have a rally or, just a push in one direction or the other, and then a period of consolidation that stays in a very tight range in comparison to the original push. All right. Now the second push, guys, is statistically speaking, the right way to, I guess, the quote unquote right way to trade a flag is that the second push is always going to be usually about the same size as the first push. Okay. So that being said, I would expect this pair to move somewhere up towards this previous support trend line that got broken. So let me actually draw a rotated rectangle. Never drawn one of these yet. Okay, something like that. All right, screw it. I'm just going to use a normal one and we'll just do a normal rectangle. So something maybe around there. Okay, guys? And back to test this support trend line at some point. So this could go up much higher as well. Danny, you're asking, is that a cup pattern formation? Let's see. On this chart right here, I'm not really seeing a cup right now. Not really seeing a cup. You'll have to go kind of explain a little bit more what you're referring at. I'm going to move on to USD Jappy real quick. All right, USD Jappy, great opportunities possibly to short this pair as well, okay? I mean, if the dollar continues to weaken, right, and we're buying gold, we're buying Euro USD, we're selling USD chafe, then it only makes sense USD Jappy is more than likely going to continue to exhaust. Also, I would say probably pushing towards the 110 area this week, towards this 50% level in this zone. Definitely. So I would say just by going through this live analysis, guys, I'd say right now, AUD USD and NZD USD and USD Jappy are probably the three kind of like highlight trades of this week, quote unquote. Definitely just because of price action, where price is at in comparison to the technicals. So you guys can see like this big consolidation top in this area and then actually we rejected it one time. You guys can see right there. We already rejected this area one time. Okay. Now, if we do not form a double bottom, right? If price doesn't start to do something like this, which again, it could, if the dollar wants to continue to strengthen or wants to, extend its long-term bullish move that it's been in, then, this is going to invalidate it. But if we have a 4-hour candle close below this support, then we're definitely pushing lower throughout the week, guys. All right, we're going to be just a continuation of this down to the 110 area. So this can offer, this one trade alone, guys, could make us 200, 300 pips this week if the markets move how we want them to move. So again, remember, that's the key thing right there. If they move how we want them to move, they aren't always going to move exactly how we want them. So we have to be prepared. And that's why risking 2% or less per trade is so key to longevity in this market, guys. Eventually, like something will click in your guys' brain where you guys will be like, wow, it doesn't matter necessarily about winning 9 out of 10 trades, 8 out of 10 trades. You can literally win 5 out of 10 trades and make a living off of trading, make a very, very good living off of trading. The key is just managing your capital. That's all it boils down to. USD CAD, guys, very interesting that this pair actually closed below support, okay? Or when I say support, I'm talking about this weekly trend line that pulls all the way back until the middle of 2014. All right, so you guys can see it's pretty much, and I don't really use trend lines a whole lot, but I always say I use them on higher time frames and if they make sense. And in this case, makes perfect sense to me. So USD CAD is really a toss-up. If gold continues to move higher and oil continues to move higher as well, which you guys can see with oil, right? We're above this top. If oil, I don't take trades on oil. I just look at it so I can get if you guys don't know, USD CAD and oil pretty much it's not 100% of the time, but they pretty much have a negative correlation because when there's a high demand for oil, that is good for oil, right? So that means oil is going to go up. The price of oil is going to go up. Right. And so when there's a high demand for oil, that's also there's a high demand for the Canadian dollar as well, because a lot of Canada's money is invested in oil. So it's kind of like you can say like oil is like kind of like a very important asset for Canada. So it's very when there's demand or value towards it, that's going to be a demand and value for CAD, which means USD CAD is going to drop. OK, so because when USD CAD goes down, that means that people are selling the dollar and people are buying the Canadian dollar, right? You're always doing something. You aren't just selling one or buying one. You're always selling one and buying the other or doing vice versa. So hopefully that didn't sound too confusing to those of you guys that are brand new to Forex. that's something you definitely need to understand. You need to be able to look at a pair and be like, okay, if it goes down, I know that that's, USD weakening and CAD strengthening. You have to be able to just rattle that off. You should not even be trading live if you guys don't understand, that's something very, very simple to understand. But in the beginning, it's not simple to understand. But what I mean is it's like a key thing. It's a very fundamental thing you have to understand when you're trading. So if you don't know that, go through Baby Pips. They have I think one of their first chapters has a great thing on it. There's all sorts of resources out there, but I feel Baby Pips breaks it down pretty simply for a lot of people. So into the analysis with this pair, we broke through the support trend line right here. And so, if gold keeps going up and oil keeps going up, like I said, we're going to see this make a big move to the downside, and we're ready to adapt to it. We all with you guys know history repeats itself. That's the whole reason. That's the whole way technical analysis is built, right? So that being said, we were expecting a bounce in this area, but we never actually took that buy on it because we never got confirmation. This looked like great confirmation right here. But again, now, I can't tell you how many people probably bought right after that just because they saw that. And I told all my premium members, wait for a daily candle to come back up and engulf it. Wait for a blue candle to do something like that. And then if and when we get that candle, then we will look to buy. But what happened, and this is why being patient is so important, guys, because people will buy this, with all the money they have in their account. They'll risk all their money because they feel so confident. They see this support trend line right here. They see this exhaustion candle. They're like, wow, everything is pointing to the upside. But you have to, you have to look at all the aspects. And this is a very, very bearish momentum that we're in. So we have to see if it continues. And sure enough, it did. And so we're looking for this pair to continue to weaken this week. And this is going to make a very, very big move to the downside if support is broken, if last week's support is broken, which is right here at like 130.40. So also, I would throw that into the hot list for this week too. I'd say AUD USD, NZD USD, USD JAPI, and USD CAD all offer some great risk to rewards. Now, the thing with USD CAD is we need to stay underneath this trend line. We need price action to stay underneath this structure right here. The minute we come back into this area, that is going to invalidate all sells completely, okay? But if we get some consolidation in here, we get a flag continuing to form, we don't see momentum to the upside, then definitely expect a big move to the downside, guys. This can be a huge, huge moneymaker this week. So, huge moneymaker. Danny, you said there's enough news to be the catalyst to bring price much lower on USD CAD this week. Definitely. But remember, and this is such for dispute. I never like to tell anybody their trading strategy is wrong or anything. But if I had to gauge how much, technical analysis or fundamental analysis I use to trade, I'd say about 80% of it is technical, 20% of it is fundamental. Even to look at things like the election, even though it's in hindsight looking at the election, it technically makes sense on the charts why price moved like it did. So that's just an example right there. But in my opinion, if I had to say, I think that the technicals always trump the fundamentals. So, you guys can even see that a great example was NFP, not last week, but the week before, the Friday before last. NFP came out, slightly worse news than the month before, but still overall good for the economy. So a lot of people were looking for like a sell-off on the dollar when that happened, but there wasn't a sell-off. It actually, continued to rally. So that being said, guys, I believe and I'm sorry if my screen is changing colors for you guys. I was trying out this new thing where it goes to the time where I live. So if the screen looks really orange, it's not your screen, it's my screen. I'll actually take that off for next week. My apologies, but we've gone through all the pairs, guys. If you're just hopping on and you missed something, definitely run through it. I don't want to make this too long because then on YouTube, nobody's going to want to watch like an hour-long webinar, but we're at about 35 minutes right now. So if you guys are brand new, also, feel free. Don't feel like you can't ask any questions. No question is dumb. If any of you guys on here right now have any questions whatsoever, that you need understanding of or help with, I don't mind helping you guys out real quick. Feel free to give you guys a minute or so to type out a question. Other than that, just a quick recap if you guys are hopping on. Out of all the pairs that we looked at, I believe AUD/USD is a great opportunity to the upside if this resistance is broken. Okay, same exact thing with NZD/USD. If we can get this resistance to get broken, which I can mark it off for you guys right here, like the 71.35 area, if that resistance is broken, that'll be a great buy for this week. USD Jappy looks like it's going to be an awesome sell if this support can be broken. All right, and same with USD CAD because we had that weekly support trend line broken, and we're definitely respecting this, especially in this area. You guys can see we definitely rejected around this previous support, now resistance. So things that's why I said at the very beginning, the markets look like the money shouldn't the market shouldn't be too hard to determine which way price is going this week, but we need confirmation first. Peter said, do you think there could be a rally in the dollar before the president is sworn in? Possibility. It's that, a question like that, Peter, is a great question, but I don't know. I don't have any insider information. I don't know for a fact that this is gonna go up. I only know to follow the same strategy I've been trading with for over 2 years now, which is, wait for the confirmations, keep it simple, and look at the technicals more than the fundamentals always. Follow what the markets are doing, follow where price is going, but it's possible. It's definitely possible to see another rally. I mean, you guys saw when, towards the end of the election and President-elect Donald Trump seemed to basically be gaining the lead and pretty much like solidified him to win. You guys saw there was a huge rally in the dollar. So I've never traded in inauguration before. So I really don't know. So I'm just going to respect the technicals on this one, and I'm going to go with kind of, what looks like seems to be happening and pretty much be biased to the downside. However, we're going to wait to see if these support levels on the dollar index get broken, right? If we start to see price just start to kind of move up and kind of start to respect this, then look for a move higher. Definitely look for another rally in the dollar. But the way things are looking, it looks like the dollar is going to continue to weaken. That's pretty much my opinion this week. Or as of right now, as of this Sunday, right? That's what looks like things are happening in the market. Things could change between now and tomorrow. But that being said, guys, I appreciate all you guys. Like I said in the beginning, if you guys liked what you heard and you want to learn a little bit more about what we do in our premium group, you can go to our website. It's right here, positivetraders.us. There's our website. You guys can see it right there. All right, and all of our daily live sessions are also recorded. You can see that when you actually create an account, you just can click login right here, and then you have a whole back office that you can access. And then we upload our daily webinars to the back office. So you can go in there if you aren't able to catch the webinar live or the daily live session live, then I always have it uploaded before the London session. So that way you have like kind of some fresh analysis 5 days a week. It's really cool. Really get a really good understanding of how I trade and how to trade pretty much. Jonathan, you said giant flag forming on the 1 hour chart, or on, what's that? 1 out of 11? Not really sure. From 111 on that 1 hour chart. I don't really see a flag too much on the 11th. Nah, I wouldn't say that this is I wouldn't use this much. Like me personally, I wouldn't if you're saying like that, in my opinion, everybody's opinion can be right, but I personally, you have to analyze the markets based on like the time frame that you're looking at. We're on the hourly chart, but this is looking at like so many hours of information, right? I'd be looking at like a tighter like scenario like this, like that's like a flag right there, right? Or like that's a flag right there. Something like that. Or like down here to the bottom left, like this is a flag, right there. You know, when you're on the 1 hour, you know, only use a couple hours for your analysis. If you're on the daily, use, you know, a couple days, or, you know, the lower the time frame you go, the less candles you should be basically like looking at. If you go on the weekly, you know, you're gonna be looking at the whole chart basically. So that's just my opinion. That's what I've found out works best. Kurt, you said, do you mainly use the 4-hour chart for analysis and 1 hour for entry? Pretty much. I mean, not even just the 4-hour. I really, really enjoy the daily. I love always looking when the New York session opens, or, you know, when one candle closes and the next one opens at 5 p.m. Eastern every day. I love seeing where the candles close at. I use the daily and the 4-hour for my analysis. And you're exactly right. I pick my entries generally on the 1 hour. I don't really look at anything lower than the 1 hour. Sometimes maybe drop it down to the 15-minute or the 30-minute just to look at price action, but I will never base a trade solely on, you know, the 15-minute or the 30-minute if I'm looking to take a position. You know, if I'm looking for like 5 pips real quick or something, you know, sometimes I'll even, you guys, I have a scalping strategy that goes all the way down to trading off on using moving averages on the 1 minute and the 5-minute chart. But, you know, that's something that it's a strategy I've built for myself completely from scratch. It's something I've actually taught a couple people that I've mentored specifically, but it's not something that is, you know, duplicable to the masses. It takes some good understanding of the charts before you can like learn how to really scalp on very volatile time frames like the 1 minute and 5 minute. So iPhone in here, you said, what's the best book for Elliott Wave learning? You can see the tab on my browser. Yeah. There's an Elliott Wave book right here. I actually put it in the premium group. I'll put it in the, in our Dropbox for you. But I mean, I can give you the link real quick. I'll click on the link and put it in the chat for you. It's a very, very, very big book, but it is great. It's awesome. It's a great free resource to learn about Elliott Wave theory. Here you guys go. That's a great book on Elliott Wave theory. Save the PDF. It's very, very long, but if you really want to learn about Elliott Wave and you want to understand wave theory, you want to understand really how to count waves properly and understanding, you know, besides it's just, you know, there is more to it than just looking at like 3 waves or 5 waves. There's a whole pattern behind it and an algorithm to that. So that's a great book for you. No problem, guys. If you guys have, I'm going to hop off of here though, guys. If you have any other, I really appreciate you guys' time and support. These questions are awesome. Awesome seeing a bunch of new faces in here. But other than that, guys, I really appreciate you guys. Stay tuned in Slack, you know, for premium members, Telegram. If you're in the free group, there's going to be a lot of movement in the markets this week. I want to catch a lot more pips. And remember, guys, the key is risk management. Any signal, any trade, no matter how hard somebody hypes it up or anything, you know, yeah, you can get lucky. I mean, you can win the lottery and get lucky too, right? But the key is longevity, is sustainability. Okay. So remember, keep those risks low, 0.5% per trade, 1% per trade, maybe 2% per trade. But guys, if you're following people that are saying to risk 10% per trade, that it's okay, or 15% per trade, you know, 30% per trade, that it's, you know, don't be following people like that. I mean, you just have to be smart about this stuff. So awesome, guys. I'm glad you guys felt it was informative, but I'll catch you guys later. Have a great week, guys.